Welcome back to Investing with Confidence, sponsored by Online Trading Academy. 25 years teaching people just like you how to trade and invest with the stock market, but also other markets. I am Josh Lilquist, and if you missed tickets to that investing class that we do at our local academies here, physical places to go to learn the skills and techniques of trading and investing. If you've been in the market for 20, 30 years, you're looking to have a potential to boost what you're doing, or if you're brand new to the market and you're looking to get started but you don't know how, this investing class is just for you. Text the word investing to the number 210-210, and this is for 2 free tickets and an insider's kit that will help you get started right away. Text the word investing to the number 210-210 right now. When you get that text, we're going to text you right back with some dates. Pick a date, and we'll make sure we get a call so we get the time and schedule that works best for you. So as Al, we talked about in that last segment about these different directional strategies. Mm-hmm. Markets go up, they go down, they also go sideways. And with these markets, we're seeing great volatility, which is presenting a lot of opportunities for all the directions right now. So we have a lot of listeners right now that, with inflation, with all this crazy stuff going on, great opportunities in the markets, they want to participate.
Sure.
They want to participate in those great opportunities to have income strategies no matter which way this market goes. Because if you think about this, a lot of people, and I've been talking with a lot of people as well, the younger kids call it a side hustle, but there's a lot of people that want that second source of income, and you have to have a strategy designed to do that. There's an opportunity with the markets to give people that chance, right? And there's times of day that might be best with the stock market. That's typically right away in the morning, mm-hmm. when the market is at the busiest time typically. Well, a lot of people work during the day, and they struggle with that timing aspect of where and when can they participate in these markets. So I want to talk about that on this segment is when can people participate in the markets? What type of assets can they use? But also, do they need to be glued to their computer?
Okay, a lot of questions there that you
answer the first one if you remember that first
one.
Well,
here's what I want to say. It's a lot of people are, as you mentioned, looking for additional cash. And unfortunately, the first thing that they think about is either getting a second job or that side hustle, maybe trying to start a little business. What they don't necessarily think of first is using the financial markets. And the great thing about these markets, typically when anybody talks about the market, they're thinking about the stock market. They're thinking about stocks and mutual funds. That's what, if you have any kind of education, any knowledge, that's typically what it is. That's what basically all Wall Street wants you to know. But there are other assets. In fact, they're the assets that they use more frequently probably than even stock portfolios. And those are assets that can be used short term. If you need additional cash, if you want some cash in addition to what you're earning from your income or maybe from your retirement accounts, then you need to use something that is more similar to a job. In other words, with a job you have maybe a weekly or monthly paycheck. Well, the same thing can be used, or the markets can be used for the same thing. There are assets that not only are short-term in their nature and in their lifespan, so to speak. In other words, you get into a position and you can get out of it with a potential profit in sometimes in a day or two or maybe a week or two, but that's more short-term. And there are assets that trade beyond the close of the stock market. The market in Minnesota is open from 8:30 until 3, 6.5 hours. No matter where you are, it's 6.5 hours.
Central time zone.
Central time zone is 8:30 to 3.
How about mountain time zone? What's that?
That would be 7:30
until 2. Yep.
So, and the further west you go, the earlier you have to get up to participate.
Correct.
But what if there were assets that traded 24 hours a day? So you could choose when you wanted to do it. Maybe you work during the day and you could trade at night, or maybe you trade early in the morning. Futures and Forex are the two assets that the institutions use on a regular basis, and those trade basically around the clock. Options is another one that the institutions use. More and more people now are trading options, and I'd say every one of the classes that I have taught in the last month to 2 months, there's been one or two people in there that have started trading options and have just lost their shorts, and they don't know what they're doing. That's why they're in these classes. They understand the benefit of it, but they don't know how to use them properly. And that's true with anything. I mean, if you get behind the wheel of a car and you don't know how to drive, there's a good chance that the outcome is not going to be very good for you.
Yeah, that's a good example. When I used to be in construction, and I was a laborer at first.
Right.
And the first thing I went on a job site, and I was a laborer for several years, and they said, get in that bulldozer and start pushing dirt.
Mm-hmm.
And so I said, okay, here I go. Here I am, a laborer. I can go sit in a nice, cool machine with air conditioning. I get in there, and there I sat.
Yeah.
It's just because I did not know how to do it. So what did I need? I needed a little bit of training. Somebody, the superintendent said, hey, this is how you go forward, this is how you go backwards, and this is how you move the machine. Same thing in the options market. You just got to learn how to do that.
Exactly. But the benefits that are available in all three of those markets, the options market, futures, and Forex, are significant. They have leverage. All three of them have leverage, which is how you really maximize the benefit of your investment dollars. We always use the analogy of a mortgage, and I think that's probably the best analogy. If you buy a $400,000 house, you can do that with maybe a $30,000 or $40,000 down payment. Now you control the $400,000 asset for $30,000 or $40,000. That's leverage. You can do the same thing in the markets, but
just real quick here, just so our listeners understand, you're not talking about needing $30,000, $40,000, are you?
No. I'm just using that as an example with a mortgage. No,
so in the market, they can use less capital, and this is kind of comparing to the stock market. So maybe 2,000, 3,000, or maybe a few hundred to control a position, right?
Exactly.
Okay.
So that's
clarifying.
The benefit of leverage is twofold. Then, and the institutions are using it. They're not putting a portfolio together with $50 or $100 or $1,000. They're investing millions of dollars in using leverage. But the great thing for the public is that because of the leverage, you can have a small account, as Josh mentioned, maybe an account as small as $2,000 with the potential of controlling something worth $100,000. That's really maximizing the value of that account, and it allows more people to participate in assets that have high prices that they normally wouldn't be able to do, say, in the stock market. If you're looking at Tesla, you want to put a position together in Tesla. Well, it's over $900 a share. If you want to put together 100 shares, that keeps a lot of people out of the market. But with options, for example, you could put a position together for several $100s and still control the movement of 100 shares of stock. With options, again, you have the leverage. You can use options as protection, as an insurance policy for your portfolio. With the futures market, you have the opportunity to invest in a number of different things that are not all correlated like stocks are. So if in a correction or crash, pretty much almost all of the good companies are going to get sucked down with the bad companies because of a high correlation there.
Yep.
Within futures, you can trade things that have no correlation, commodities, for example, in the stock market, a number of different things.
Yeah, just to give us some examples, too, I mean, a lot of people aren't in the market because they think they don't have enough money. And that's almost true with the stock market because, I mean, for example, the Apple right now is roughly around $173 per share. Mm-hmm. If an investor wanted to buy 100 shares of that, they're tying up $17,000. And then you can't do anything else with that $17,000. So you're not very efficient with the capital that you have. By the way, maybe a lot of our listeners don't want to use $17,000 because they either don't have it or they're not comfortable doing that yet. Well, why not use one of these leveraged assets where, as Al is talking about, like say in the Forex market, you get 50-to-1 leverage. So if an investor has a $2,000 account, as he was talking about, at 50-to-1 leverage, it'll act like $100,000. So basically, you're capital efficient. You get more buying power with the dollars that you have. So it allows people to get in the market and do it more comfortably because they're using less capital. And I know we're kind of bringing these topics to you guys on the radio, and that's why we have these investing classes at our local academies near you. We have classes all over the world, but if you're listening to the show, we have a class probably within 10, 20 miles of where you're listening right now. So come to one of these classes, see what these different assets are, see how to be more efficient with the capital that you plan on using. So get your phones ready. I'm going to give a text number so you can text in for a free investing class. These are local, but also a quick start kit that has some different techniques and concepts, but really how to get started with some of these assets right away. Text the word investing to the number 210-210. That's text investing to the number 210-210. So, Al, you work with a lot of people here at the Academy. And one of the common questions that you get, I know I get this as well, especially in these investing classes, is I don't have enough time to do this. I have a job and I got some kids and I got, young kids, I got high school kids, and we're doing things. So they want to be able to do things off hours like you were talking about with these markets being 24 hours a day. But a lot of this, one of the misconceptions of trading and investing is people think you have to be glued to your computer screen. Now, I want you to kind of explain what that really looks like as a trader or investor. The movies portray it to be, it's great entertainment. Smoking a cigar at a computer screen, drinking scotch, emotional, sweating. That's not how trading and investing should be. So just kind of explain what it looks like to place a trade or investment and walking away from your computer, being able to do that and not have to worry, not have to be concerned because you're protected on both ends.
Right. And that is the way that it should be. If you're not doing what I'm going to talk about here in a minute, then you probably are not going to be successful, and you're going to end up maybe in therapy, but certainly going through many, many stressful evenings. If you sit in front of a computer, if you watch what's happening, your mind is going to take over, and it's going to be a battle between what is right and what you emotionally think you should be doing. You have to, as much as possible, take your brain out of it. And we do that by showing our students how to use a strategy that is designed to follow the people that are successful and use a step-by-step, rules-based strategy to do that. It's a pattern. We are helping you identify patterns that the big institutions, the people that are successful, are leaving on a price chart. Once you identify those patterns, you start reacting to the pattern, you keep your brain out of it. But what we want you to do is learn how to identify those patterns, which we teach you. That's our core strategy. It's part of our education. Once you do that, then you put together a trade based on what's going to give you the greatest probability of a trade or investment being successful with the greatest amount of profit and the least amount of risk. You set a trade, you preset a trade, so before you're in the trade, your broker already has the information, knows exactly what price you're going to pay to get in, what your protection is going to be, and what your target is going to be, what your profit is going to be. Then you just let the software do the work. So you set the trade, and then go out and have some fun. Enjoy your life. Enjoy the limited amount of time we all have, and know that if you're wrong, and by the way, let's be honest, everyone is going to be wrong occasionally. But if you're wrong and you do this the right way, any potential loss you have is going to be a small loss. What can a small loss never become? A big loss. And if you eliminate those big losses, you'll have small wins that will offset those small losses, and then you have left the big wins that are out there. But if you preset that trade properly, if you're wrong, you have a small loss. If you're right, your profit is going to be protected. And I think one of the mistakes that most public traders, most of the retail traders make is not knowing how to identify where to take a profit. And what happens because of that is that they take a profit too soon and they leave a lot on the table, or they stay in too long and they let the profit be taken away. And one of the questions I always ask people in the class, I'll do an example on the board. I'll draw an entry to a trade and then have that trade start going in your favor and ask them how they set their target. Where are they going to get out? Almost nobody has an answer that is correct. Most of them just kind of smile and go, I don't know.
Yep. And some of the things that you can learn at these investing classes that you were just alluding to is how to get in these markets, but how to do some of these strategies that we're talking about, how to do them properly, but also how they actually function and how they actually work. And I think that's what a lot of people want to know is how do some of these different strategies actually work? Well, how do you do them? What's the times of day you should do them? What type of capital do you need to get in these markets? And we really dive into all that stuff in these investing classes. So if you want to come into one of these classes, text the word investing to the number 210-210. That's investing to the number 210-210 for a free class and a quick start kit, which will help you get started right away. Coming up next, stay tuned. We're going to talk about some more retirement strategies, but income during retirement, but also protecting and hopefully building longevity in those retirement accounts. Make sure to check out the podcast if you missed part of the show, Investing with Confidence, wherever you listen to podcasts. This is Josh and Al, Investing with Confidence. We'll be right back.